Everyone's concerned about the changes to the buyer commission structure for realtors, and that's what's on everyone's mind. I get calls about it every day about for my opinion on it. And I know all of you are starting to hear from your brokerages, from coaches, from people who do training and seminars for the realtor community on how it's all going to work. And a couple key things we're going to talk about is a value proposition, having a unique value proposition that's not just I'll find you a great house. It needs to be tailored around negotiation. You need to study and learn how to negotiate and raise your ability to negotiate. But I want to share with you today some practical reality of what it'll actually look like. Because if someone's putting a larger down payment down, it's actually very easy to deal with building your commission into the purchase and the loan still. The reality of it is it's always been built into the purchase. It's just that it was built in by the listing agent setting it and then just saying, here's what you get, and here's the price, and negotiate it that way. So we're just going to be changing the way we do it at the end of the day. And this week it's going to be for 10% or more down. Next week I'm going to do the one that's more challenging, and that's for the people that have less, 5% or less down. And I'll go over that next week. So here's the good news. If you have a buyer putting 10% down, you can easily take care of your commission. And I'm going to show you how right now. So let me minimize the screen and let me walk you through this. So I'm going to assume a $400,000 purchase price. Interest rates are about 6.875, so I just put in there 6.75 today. Doesn't really matter for the purposes of this discussion. And you can see the payment's 3408. The cash to close is 5665. That's all, and that's your down payment. That's all closing. I did assume that the seller would pay title in this example. Now, here's the thing. This is 10% down. Now look at it. It's 3408, 5665, and it's assuming we rolled a $12,000 commission into the purchase price. Now, obviously, it has to appraise. So part of your process would be going in that route. And I don't need to tell you guys this. You obviously know this, but you'd have to figure out, hey, what are the comps? Do I think there's room to roll it in? Did the listing agent price it that would allow for that to happen, or they have a seller that doesn't care about the buyer commission and figure it's your problem, and they have not priced it to roll in? So regardless of the case, let's assume you can roll it in 412, 3408, 56,000. Now, what's really cool is we can just roll your $12,000 into a higher loan amount. So if we keep it at $40,000, okay, I'm just simply rolling. I'm putting 7% down rather than 10% down. Now here's the interesting thing. So that's creating 3% or $12,000 in which to work with. So if you notice, the loan amount only goes up by $2,000 a month. Now, if you saw the video paused. If you saw this jump from 43 to 55, the reason I did that is I didn't have the buyer commission listed as a cost, so I had to fix that. But that being said, now that it's fixed, the payment's actually $11 lower and the cash to close is slightly lower. Boom, there's your commission. Now, I want to drill down on this a little bit further to show you what I mean. So if you go into the more information button here, or I'm going to show you the payment breakdown, you can see the difference is right here. The taxes I'm using are basically going to be about the same. They would be exactly the same in that property type, but they rolled out on a factor there. Insurance $283 a month. Mortgage insurance premium is going to be about the same. Depending on how high this goes, it can go up a little bit, but about the same. And then the closing costs, the big thing is, look at the closing costs. It's because I'm adding, or you'd be adding, $12,000 as a realtor commission to borrower paid closing. And that's the big difference. So we basically essentially financed it into the loan, but at a lower price. So it's the same thing to the buyer. It's just structured differently. And sort of an aha moment, actually. Now, this will get, like I said, on the small down payment, it's going to be more involved, but it'll still be very similar, and I'll show you next week. So make sure you watch next week's Tuesday tips. But let's look at it even from a cost basis. So it's $11 difference, and then over 24 months, this does save money because there's less cost involved, and over the net, but the net worth is relatively the same. And it's 60 years. Let me put 60 months. The net worth is about $12,000 difference. So on a cost basis, this one would save money, just because there's an extra $12,000 fee. But at the end of the day, to a buyer's point of view, it's the same thing. It's the same payment, it's the same out of pocket, and so it's no issue at all, and then you get your buyer commission paid. The trick is going to be for you to work with the right lending partner that can explain this. I'm a certified mortgage planner. I do what that is, it's a fusion of financial planning and doing the loan. So I give the buyers very high-end level advice in terms of debt ratio, sustainable housing payment, distribution of assets. And the reason why that's important is obviously if you're not working with me, I'd like to work with you. However, there's an important thing to understand here. The lender has to have the ability to explain all this to your prospective buyer, and they have to have the financial literacy to understand how to explain moving assets around for a buyer. A buyer might have a 401k, they might have a Roth IRA, they might have other financial assets. There might be other ways to restructure things in their world that would allow them to incorporate your buyer's commission when explained properly and from a point of view of financial planning. And very few loan officers will have that ability. So I'm always open to take on more realtor partnerships. And for my current partners, I hope this gives you some comfort on the high down payment, and watch next week for the low down payment. Have a great day.